In a world where market cycles are evolving and global capital flows are reshaping the investment landscape, strategic positioning has never been more important. That's why we're proud to introduce a solution designed to capture the next wave of global fixed income investment, driven by Korea's historic inclusion in the WGBI. In October 2024, it was officially confirmed that Korean government bonds would be added to the FTSE World Government Bond Index. This marks a historic milestone for Korea's capital markets. The WGBI is one of the world's most widely recognized global bond index, tracking government bonds issued by 26 leading economies. It serves as a key benchmark for major institutional investors, including global pension funds, sovereign wealth funds, and insurance companies. According to the FTSE Russell, approximately 2.5 to 3 trillion US dollars in global assets are benchmarked to the WGBI, making it one of the largest government bond index globally. Korea will be phased into the index over 8 months, starting in April 2026 and concluding in November, ultimately reaching a final weight of 2.22%. Korea's inclusion in the WGBI signals that its bonds are now recognized as stable and trustworthy assets by global investors. Here's the key impact. Funds tracking the WGBI must buy Korean bonds in proportion to Korea's 2.22% weight in the index. This alone could drive an estimated 56 to 67 billion US dollars in capital inflows into the Korean bond market. Additionally, we expect increased participation from active investors, including global asset managers and pension funds. This anticipated inflows of capital is expected to boost demand, compress yields, and contribute to greater stability in the bond market. That's why now is the time to act preemptively and position ahead of the full wave of capital inflows. The ACE FTSE WGBI Korea ETF offers targeted exposure to Korean government bonds best positioned to benefit from this structural shift. This ETF is specifically designed to invest in WGBI-eligible bonds. As of May 30th, the fund holds 63 high-quality Korean treasury bonds, each issued in denominations exceeding 1 trillion Korean won, ensuring ample liquidity and strong credit quality. The portfolio's current duration is approximately 10 years, aligning well with long-term institutional investment horizon. According to the Korea Securities Depository, trading volume in foreign investors' consolidated accounts for Korean bonds exceeded 60 trillion Korean won, just 7 months after the WGBI inclusion was announced. This was supported by a system developed in partnership with the ICSD, launched in June 2024 to facilitate cross-border investment in Korean bonds. We've seen this pattern before in both Mexico's 2010 and China's 2021 inclusion in the WGBI. Investor demand began rising even before the official entry date. Following inclusion, Mexico saw long-term bond yields fall by approximately 300 basis points over 3 years. China also experienced significant foreign inflows and yield compression post-entry. We expect Korea to follow a similar path, with demand already accelerating ahead of inclusion and further yield stabilization likely to follow. As Korea enters a monetary easing cycle, the current environment represents one of the most favorable periods for bond investment in recent years. Amid heightened global market volatility driven by geopolitical tensions and U.S. political uncertainty, this may be an opportune time to increase exposure to stable fixed income assets. The ACE FTSE WGBI Korea ETF offers investors a simple and effective way to access high-quality Korean government bonds, positioned to benefit from global capital inflows. Whether your objective is to capture gains from falling yields or to manage portfolio risk, this ETF provides a smart and efficient solution. So, if you're considering an investment in Korean government bonds, why not choose a fund that directly targets the 63 bonds expected to benefit most from Korea's inclusion to WGBI? Stay ahead of the curve with the ACE FTSE WGBI Korea ETF, your gateway to the next phase of Korea's bond market growth.